All right, since the last couple times I've forgotten to hit record, I'm going to hit that button. There's still a 60% chance it won't work. Hi, Anton. Brian, the great part is we can see you and we can't hear you, so this is working really nice for us. I'll let you hop in for a second to give you a rebuttal. Go ahead. Oh, good, it didn't work.
Well, thank you for that.
Oh, good, now it's working and you're out. Okay, yeah, this is nice. All right, so I see Kara. All right, I think Kara's in Hawaii, maybe Maui. Oh, look at all these on-time people, huh? We won't have to find them. So let me tell you guys who are early a bonus story. So Michael and I and Brian and Nikki and some others of us, we've all worked together at one time or another. But I don't know if this was something that you created, Michael, or that I created, but we like to start our meetings on time. Is that fair to say?
Oh, yeah.
Yeah. So
Yep.
This is a little different format, but when you're in an office and you have staff, you know, if you say you're starting at 10, you got to start at 10 because something else is starting at 11 and so on. And I thought that we instituted, or at least threatened to, some sort of penalty system for the length that people showed up late. Is that about right?
Yes.
I don't remember. Something like, hey, first 5 minutes, you know, it's $5. 15 minutes, $10. I don't remember the real. And 20 minutes, you should go look for a new job. Something like that.
Yeah.
So kudos to all of you who are so on time. And we're going to have a fun, I'm looking at my monitor over here, so forgive me. Have a fun time. And we'll give the internet world and people trying apps for the first time just an extra minute or so.
Sure.
See what happens when I click this button. I'll be right back. Yes, of course, on my monitor machine, Windows has about 7,000 updates I need, so that's nice. Okay. So I've got 501 here. We'll give it to 502. Anybody who's there, Anton, where are you out of right now? Are you in Philadelphia? Is that right? You can just type it in. I've got everybody muted except Michael and I. Yeah, Philly. What's that show that I like from Philly? It's Always Sunny in Philadelphia.
Yeah.
That's the one. Yeah, Brian got it. Good reference. Yeah. Oh no. As far as we were assuming that's some sort of documentary about the local culture. Not really.
Well, for a change, we got sunny in Seattle.
Yeah, that's right. It's actually literally sunny. That's why I had to close the blinds. I don't know if you guys can see that, but I've closed the blinds so they don't completely overwhelm my eyes. And Nikki, I think she's down in Texas. That's good. We will have a little Q&A as Michael goes through kind of the core of the presentation today. And all right, we'll go ahead and get started. And as guys join, you'll catch on. The beginning's just fluff anyway. So as you guys can see, oops, spoiler
High
alert,
quality.
the beginning's fluff. Yeah. I just like to set the stage because as people don't have context, then it's sometimes difficult for them to kind of put the pieces together. So this is a type of session that I've done from time to time. Some of you may have joined these, and some of you, this may be the first time. But we just call them Mentor Mondays. They don't always have to be on a Monday, but the alliteration works on this particular day. And the objective is that we just share some ideas and things we think that are important to the average entrepreneur, and most of all, and most specifically, e-commerce entrepreneurs, especially those who I call Amazon Cornerstone business. And I generally push the subject matter based on the amount of questions that I get from people in the field. And these are questions, everything, you know, on the small level, let's call them, you know, hundreds of dollars of problems, to the big level, which are hundreds of thousands of dollars of problems, or beyond, even the seven figures. So these sorts of things are the types of projects that we put into here, and this particular one's about finance. I'm going to give you the briefest of me and make sure that I disclaimed everything. I don't know nothing about nothing, and I realize that's excellent English and spelling as well. But I like to come to almost everything from a position of ignorance. I probably don't know enough about whatever the subject matter is, so I want to learn. I want to get smarter. I want the people who know the most to tell me the most, and then I can make educated decisions. And I encourage everybody out there to take a similar perspective of, taking a step back from what you think you know, and opening yourself up to somebody else's perspective and opinion and really expertise. This is my 29th year in business, owning my own company, by the way. That's from literally the time I was 18 forward. I've had my own company, and it's changed forms many, many times, but that's just what happened. So had a lot of great fun and a lot of awesome success and awesome failure, and it's been great the whole way. So I'm going to kick it over to Michael Pinkowski and let him kind of tell us the way it is. So just bear with me a moment while I click these buttons. And I'm kicking it to you, Michael. And you tell me when you got the con.
I think I've got it. You should be full screen.
It looks good on my side. Everybody who's playing along here at home, just let us know in the messages if you can hear us okay. Let us know if you can see Michael's screen. And just make sure everybody's technically on the same page we are. Anton says good. Heather, good. Thank you for participating. Nikki says good. Brian says good. Kara, Jeff, Brandon. Oh, hi, Brandon. Welcome. And Jeff, welcome to you. Oh, and Devin's out there. Nice to see everybody. Congratulations, Devin, on your fundraiser today. It looked like in 5 hours, all jammed up by the time I got there. So nice work. So, Michael, go ahead and kick it, and I'll stay out of your way.
Okay, terrific. Thanks, Steve. All right, so with that, we go backwards. I want to start just with a brief introduction. I can keep this short. I've started my own business. It's called Go Be Strong, and I'll just give you the basics of that. It's a coaching and consulting business. My background is I've got 35 years of business experience, 20 of it in e-commerce. I started by building e-commerce websites for the flooring industry back in 1997, I believe. And I'm not a great coder, but back then anybody could do it, and I proved it by being one of those people. But I've been around e-commerce for a long time, everything from startups up to $100, $150 million companies. I've had a number of senior management roles, chief operating officer, vice president, director of marketing and new products, things like that. My education is an MBA in marketing and finance from The Ohio State University. And I recently became a certified StrengthsFinder coach, which is the sort of executive coaching side of my business. So why are we here today? Steve invited me in because he and I have had a shared goal for a while now, and that is to help every entrepreneur to succeed. Steve's a far greater and more successful entrepreneur than I am, but I've owned my own company multiple times and had some success. I know a lot about how hard it can be, and at this point in my life, I want to help others to do it. So that's the goal. Our success in business is measured on the financial scorecard, and I know a lot of people just don't like looking at financials. I've had P&L responsibility for, like I said, multiple companies, and I just want to share some of my ideas about how I go about it, how I look at it, and maybe there's something that you guys can take away from this to help you be a successful entrepreneur, which is the real goal here. So I named this thing Face Your Financials, and that's just the title that I went with it. And let me give you a quick overall view of what we're trying to do here. First of all, for those of you that have a fear of your financials, that don't like looking at them, for you that you'd kind of rather go to the dentist than do this, I want to encourage you to commit yourself to this process. We're going to spend a minute or so talking about that. Then we're going to talk about the basics and kind of get into a little deeper dive on the income statement. And then we'll look at the bigger picture, because the financials are good, but they don't cover everything. And there's more to a successful business than just the financials. And then we'll make a plan, talk about a budget and how to do that. And then lastly, we'll sort of give you some action steps, how to set up a system to get all of this working. So that's the overall goal of this presentation, and I hope that it's helpful to you. I've tried to put in some takeaways that are helpful and useful to as many people as possible. But first, this important warning. We can't do a deep dive on all of that in 1 hour, and your business is different than everybody else's business. So there are particulars that will be unique to you, and I don't know what those are, and so I can't address them, and all of that's kind of challenging. So I urge you to, you're smart, keep all of this in context and realize that there's more to it than we can do in a simple 1 hour thing. And lastly, don't take anything that I'm doing as a way to say, well, I'm going to do financials in a different way. Financials specifically, income statements, balance sheets, cash flow statements, need to be done in a GAAP that is a generally accepted accounting principle method. There are rules there, and you don't go to jail for violating them, but down the road when somebody comes to look at your financials, they want to know that you did them in compliance with these sort of guidelines that are out there. And if you start to make up your own guidelines for some of this stuff, you're going to get yourself in trouble. For instance, you could say, well, at our business, we recognize revenue as soon as the customer shows up, long before they buy anything. Well, that's going to get you in trouble. It's not going to state your business clearly. And there are people out there like your banks, your investors, your suppliers, everybody that's going to want to know what's a clear picture. So don't take anything that I'm saying to change how you do your financials. Take what I'm doing to say, I want to add in these other components to my financials and around my financials so that I've got a good picture of what we're doing. All right, so on the topic then of sort of committing yourself to this, again, I think there's some people out there that don't think financials are fun. I've never thought they were a ton of fun, but I can tell you when your business is humming, I've been known to say, hey, I need the financials. I want to see them. How did last month go? I want to see it because that's the scorecard, right? That's where it gets really specific and tangible, and you can say, this is what we did. And particularly at the end of the year when you've got goals you want to hit, I really like to know, did we hit those goals? So I do get a kick out of financials, but I know not everybody does. If you don't, then think about your strengths. Think about what the things that you like to do, the things that you are good at doing, and figure out how can you connect that to your financials. So maybe you're an achiever, somebody that likes to just kind of check things off your list, or you're a competitor. You really like to set a goal and win the race. Well, when it comes to your financials, then set some small goals like, hey, we're going to get the payables entered by the 5th of the month or the 10th of the month. And that way, most of the hard work is done, and we'll be able to see the financials in a reasonable amount of time. Maybe you look at your financials and you are looking at your budget, maybe, and you've reached a certain goal. Well, hey, then it's pizza for everybody, right? Because in the financials, we got this thing done. So it forces you to complete the financials in a timely way and to get in and look at them and say, what did the numbers say? So if you're an achiever or a competitor, that's ways that you can be motivated to get into the financials and start to see them as something fun to do. Maybe you're somebody totally different. Maybe you're a learner. Maybe you're just curious and inquisitive, or maybe you're really analytical. Well, get into your financials and start digging around. Find those differences, those variances between numbers, either between this year and last year, or last month and this month, or between budget and actual, and dig in and say, well, why aren't we getting what we wanted out of this thing? Or what happened on this number? This looks really good, or this looks really bad. But dig in and try to figure out what happened. Or myself, I'm a future-looking guy. I like designing strategies to accomplish goals in the future. I like thinking about what it's going to be like in the future. So think about your budget. Think about laying out your plan and how well are you tracking to your plan. I mean, here we're going to be coming up on mid-year pretty soon, a couple of 2 months. So are you on track for the first half of the year? You laid out this plan. How's it going? So those are some reasons that can get you interested in doing this. But basically, I love this quote about entrepreneurship. Entrepreneurship is living a few years of your life like most people won't, so that you can spend the rest of your life like most people can't. You are an entrepreneur. You've done stuff way harder than just getting into your financials or putting together a system or whatever. That's not the hardest part of starting a business, running a business, finding, actually making money. You've done stuff way harder than all the stuff we're talking about today. So don't be afraid of it. Think of it as just another system that you got to build. Steve's always talking systems. So it's just another system that you got to build. When you get it right, it will run right, and it will do so for years. And then if you get to a place where you want to do an exit, somebody says, hey, I want to buy that product line, or I want to buy your whole business, or maybe you get really big and you want to go public, you want to take on investors or something, hey, everything's going to be clean and ready to go. The last thing you want is somebody coming in and saying, hey, it looks like you haven't really been paying attention to your financials. You seem to be off by about 10%, so we're going to cut the price that we just agreed to by 10 or 15% just to kind of keep it fair. If you run this thing right, if you keep it clean, you're going to be in great shape and get maximum value for your company.
Michael, let me just give you and the gang out there a little bit of literally within the last 24 hours a deal that happened. So somebody contacted me, and they, from time to time, will buy Amazon or other types of e-commerce businesses, and they said, hey, we're interested in selling it. We're like, hey, we're interested in buying. And they sent me their financials, and unfortunately their financials, they didn't even match up to themselves. And so the entire basis for their valuation, the entire basis of the company and everything, it was all mishmashed. It was completely wrong. The balance sheet wasn't balanced. The P&L didn't even add up to itself. And we had to pass on the whole thing, even though the initial idea was very intriguing to us. So you guys all know the financials are important. I do think that a guy like me, I'm predisposed to not want to go sit down and deal with the financials until I learned about them, until I learned how insightful they can be to my business. So, by now, hopefully you guys are convinced that it's really important, and it can be fun. Unlike Nikki, who naturally loves financials, some of the rest of us don't like it. And if anybody wants to leave a comment whether they like or dislike financials, you're welcome to. But carry on, Michael. It's your show.
All right, no problem. Thanks, Steve. That's a great example of real world, right? Of not getting quite maximum value. They got no value, right? They got to kind of restart. And there might be a good business in there someplace, but they didn't present their numbers right, and that's the issue. All right. So, anyways, commit yourself to getting into this thing. Make it something you really want to work on. All right. Let's move on to the basics. All right, so I said earlier that the health of your company, a big part of it is the financials, and we're gonna do a quick overview of some of that. But I would be negligent if I didn't tell you that having satisfied customers was really important to the health of your business. Having employees that were engaged and felt a sense of pride and ownership in the work that they did, and they were sort of working for the better interests of the company and looking for dangers and capitalizing on opportunities. So an engaged employee workforce is important. Having great vendors is important. And then building a brand is really important. And it does not show up, none of these things show up on the financials. And, there's no line item in there for that stuff. So we're not going to cover a lot of that, but it's important that you know that there are other things going on besides just the financials. So we're going to kind of dim those on our screen, and then we're going to move on, and we're going to say, all right, what are in the financials? Well, there's three. One is the income statement, and the income statement is going to start with sales, how much revenue did you have in a period, typically a month, a quarter, a year. What were the costs of the entire business, and then subtract it out, then those are your profits. It reads top to bottom, and you start with sales, and when you get down a little further, you start trying to associate as tightly as you can to the actual sales of the product, and then stuff like overhead and more general expenses fall further down. So something like insurance would be way down the list because it covers so much stuff, and it's not tied to an order. But freight is further up because it's tied to an order. Then you've got the balance sheet. And as Steve just pointed out, the balance sheet should balance. The parts that balance are all of the assets of the company, all of the cash that you've got in the bank, all of the money that is owed to you by people that have bought stuff from you, all of your inventory, all of your equipment that you've got, and maybe you own a building or some land or whatever. All of those assets get totaled up on the left-hand side. Then on the right-hand side, you've got liabilities. Who do you owe money to? Either long-term or short-term or whatever. What other obligations have you got that are out there that you know you're going to have to pay? When you subtract assets or you subtract liabilities from assets, you end up with a difference, and that's called owner's equity, and that's what gives you a balance sheet. Then there's a cash flow statement, and I learned this. One of the very first things I learned about business way back when I was, I think, still in high school was there are 10 things that matter in business. The first 7 are cash flow, and the other 3 don't matter. So this is probably the least well-known of the 3, and it's arguably the most important, because you can have an income statement that shows you making money, but if you're not collecting that money, if it's not coming in in a manageable way to allow you to grow your business, you could go bankrupt because your cash flow statement has shown that you're headed the wrong way on it.
Yeah, so Michael, let me just pop in. For anybody in the little chat box there, if you're producing these 3 statements for yourself each and every month at a set time, go ahead and take a minute to brag. If you're not, just put in ARG or oh or some other sound effect like that. But carry on, Michael.
Okay. So most of a cash flow statement is and it just, that money makes more money. And then there's also financing. Companies like GE and Boeing and guys that sell big things, they have a big financing operation as well. In your case, it's almost all going to be operating, but it's going to be sources of cash and uses of cash. And it just says what's happening with the cash. And it's a really, again, least well known, but probably most important to have a good understanding of. All right, so let's just take one of them. Again, in an hour, I can't do everything, but and let's just take one of them. Let's go through the income statement. And we're just going to have sort of company X here, and we're just going to pick 3 months, January, February, and March, and imagine that these are in thousands of dollars. So we start at the top, like I said, with revenue, and hey, look, sales are up. We had 90 in January, 95 in February, and 100,000 in March. So I've associated a little chart with that, and hey, sales are up. So we're looking great. Cost of goods sold, right now we start to gather our expenses. So 45,000 of the 90 was what it cost us to get this stuff. And that means when you take the 45 from the 90, you've got a gross profit of $45,000. And you can see in February it went up and in March it went up. So profits are up. So far, we're just rocking this. Then we've got shipping and handling. So we've got to get the stuff out of our warehouse or an Amazon warehouse and out to our customers. And of course, as sales went up, shipping and handling went up. So we went from 10 to 11 to 12,000 on that. And then selling and marketing. Again, it's easy to associate shipping stuff with specific orders, so it's easy to total. So we move it further up in the income statement. Selling and marketing, a little more general, harder to associate with very specific orders. So it's a little further down. And so, but again, sales went up, so selling and marketing kind of makes sense that it went up a little bit too. And then we've got this big category of general and administrative. Now, of course, in the real world, you've got a bunch of accounts, dozens, maybe hundreds underneath some of these categories. They just keep breaking down, and in a little bit we'll do a little breakdown on it. So general and administration, this is managers' salaries, what you pay for the accounting software, rent, heat, light, pizza for the whole company party, you know. So in this case, we didn't hire anybody new, and so we kept our costs pretty flat, $10,000 every month. So it's really cool that we're holding the line on those costs. And then we come in and we take the gross profit number and we subtract the 10, the 15, and the 10, so that's 35,000 from our gross profit of 45,000, means that from operations, after we figured out all of our costs, we've got an operating income of $10,000. And then we've got taxes and we've got other expenses. Most of us don't have lots in the other expense category, but we got taxes, so we'll figure that in a third, and out it goes. And you can see we finished up January with 7,000, and if we total it all up, it looks like we made $12,000 in 3 months. And so we've got great net income. So we're really, what a great quarter we're off to. So I'm feeling great about these numbers. I hope you are too. But let's take a closer look. Same numbers, okay? Revenue going up. We saw that. Cost of goods, same as I had before. And you subtract it, so we got the same gross profits, right? And gross profits were going up, and we had a happy little chart about that. But let's drop in one extra line here, and let's just calculate what the gross margins are. So this is a ratio, right? So we're going to take the 45,000 in gross profits divided by the 90,000 in sales. 45 is half of 90, so we come up at 50%. But you can see in February that we lost a little ground, and we gave up a half a point, and in March we gave up another half of a point. So we're in a position now where gross margins are dropping, and they're not dropping a ton, but they're dropping, and this is where we start, this is, now the money's starting to flow out, and so we don't like that. We'd rather see stable gross margins are really awesome if we were able to find ways to grow our gross margins. So then we get to shipping and handling, and again, we sold more stuff, we had more orders, so of course our shipping and handling would go up, but it kind of went up more than I would have thought, right? We started at 11.1. We're going to take this 10, divide it by the 90. We're at 11.1, then 11.6, finally 12. So it's up a full percentage point. So we gave up a point here and a point here. We're down 2 points already. So shipping is kind of eating us up. And really, shipping should be shipping in my mind. I mean, there's always exceptions, but what's going on here? Then we get to selling and marketing, and again, sales went up, so obviously we, must have done something to, kind of make those sales happen. We could expect those costs to go up, but they kind of went up a lot. They went from 15 to 25, from 16% to 25%. Ideally, your marketing spend would start to get you, it would have some sort of efficiency and start to get you better customers, but it turns out we had to pay a lot more, or at least we spent a lot more, to get more in sales. So this ratio's really telling us a lot. And marketing costs are always, it's tough to know. It's always hard to know what your marketing's actually doing, so it's hard to know where to invest more and where to cut. But in this case, we've got an alarm bell going off that says marketing costs are up a bunch. We already talked about general and admin. And then operating income, right? We had a great January, but March was just not that hot. So we were at 11% operating margin, and now we're down to 2% in March. So this is really kind of a dismal chart, right? We were going from really great margins down to, kind of barely keeping our head above water. And as Steve likes to point out, there's a trend here that we really need to be alarmed about. So then we'll just kind of click through these other two, because like I said, taxes are taxes, and then obviously the net income picture is every bit as bad as the operating income picture. So now I'm feeling terrible, right? One page ago I was feeling awesome. Now I'm feeling terrible. So let's go through it one more time. We're going to put them all out there, but we're going to drop in a total and look at the whole quarter, add it all up. And then think about it. Maybe we did a budget. And so I've filled in all those blanks. So now we'll go through it. Well, we budgeted 275 and we did 285. So we were forecasting an increase in sales, but wow, we beat it, and that's really great. And gross profits were 3,000 better than expected, right? We thought we were going to do 138, we did 141. So this is really cool. We do have this problem with gross margins dropping, but we delivered more gross profit than we expected to. But, and we talked about this, shipping is high, and marketing It looks close as a percent. We actually, this 16 and to 21, we were actually expecting to be at 20 the whole time. So this month was great. This month was close. This month was bad. All in all, we're high, and it's a lot of money. It's $5,000, but we aren't as far off as you might have thought by looking at that. But that's because we had a budget and we had a plan, and there was some thinking behind it. So you can see the impact when you get to operating income, right? We only ended up with 18,000. We wanted to end up with 22,000. That's 82% a goal, and that's not what we really wanted to see. So we've got to give some thought to what's going on here. So it becomes a bit of a whodunit. This is, again, this is where you start to try to make it fun. There's a mystery here. What happened? Sales were up, but it could be for good reasons or for bad. So, for example, maybe we sold the same stuff into new markets, either geographic or economic or whatever. Maybe we had a new product that came online and sold some stuff. Or maybe we had the same stuff and basically we were cutting price to get deals. And if that's the case, it's nice that sales are up, but we've got a real problem if we're cutting price. Our gross margins are down, but was it because of a lower selling price, or was it a one-time price increase that we got from a manufacturer or some other sort of hiccup that showed up in that cost of goods category, and we didn't, maybe it's a permanent thing or maybe it's a temporary thing. We don't know. We need to dig into it. Who done it? Shipping is high. Maybe we did a free shipping promotion, and that's what got us more sales. That's I've been doing that my whole life. That's a good thing. But maybe we're doing that and we need to renegotiate our shipping rates because we've got more volume going out now. And advertising is up and it's swinging wildly, right? Remember January at 16 and March at 25? Something worked really well in January that got us a bunch of orders. Why can't we do more of that? Maybe it was email, right, which doesn't cost nearly as much. And maybe we didn't do as many emails in March and it just didn't perform, or maybe we had something else going on. So this is where you kind of have to start digging in and seeing what's going on in your financials and trying to figure out what it's doing. And you do that with putting together some ratios and some charts and trying to develop some pictures and then say, what's going on here? Now, you can do the same thing on the other statements that we've got. On a balance sheet, you can start looking at your trends on payables, that is the money you owe to vendors, or receivables, that is the money that's owed to you. You can do deeper dives on inventory. What kind of turns are you getting? What's happening with the age of your inventory? And then maybe you're in a business where you've got some plant, property, or equipment, some machinery of some sort. And you need to be keeping track of what's going on there. Maybe somebody's out there buying a lot of maintenance stuff, and maybe it's time for a new machine. I don't know. And, of course, on your balance sheet, debt's going to show up, and you really need to keep track of anything that's going on with debt. Then the cash flow statement. What money came in and what went out? What do the next few months look like? If this is where we are this period, if we've got a cash flow statement that looks out a few months, let's plug in the actuals and see what the rest of the year looks like. All right, now let's look at the bigger picture. On a quarterly interval, and you really can't do it within the first couple of days at the end of the quarter, because some of these numbers take days, weeks, or even a month or so to come out. But you really should be cognizant of what's going on with sort of nationally and globally. What's the U.S. GDP doing? What's inflation doing? What are currency? Are you buying stuff from China? What's the yuan at? You need to be tracking some of this because it's all going to show up in the rest of your business. Maybe business is growing really fast, but you have to recognize that part of it's because you're good and part of it's because things are taking off. I've been in the home improvement business a couple of times when housing starts were just on a tear. Well, I can take credit for some of the gain, but if the economy is growing and particularly driven by housing, well then it's just a rising tide that's lifting all the ships. And I shouldn't get too confident in what I'm doing, claiming greatness because really the whole thing went up. And by the same token, when things are dropping, maybe we've done a really good job and we've got better plans. And even though sales are down a little bit, maybe we're still not losing as much as they are nationally or whatever. Then look at your industry, the market segment that you're in, and at your competitors. What's going on? I've worked in multiple companies, and we track. A public company is a great place to learn what's going on, and they can say, hey, our e-commerce sales are up, 15%, and you say, too bad, so sad, we're up 30%. We're outperforming you because we're an e-commerce company too. The other thing I'll tell you is you can look at import records. You can track, products coming in from overseas. A lot of that stuff gets categorized at the docks, and there are numbers available there to take a look at. So there's more to just than the income statements and the balance sheet and then the cash flow statement. So how is your business doing? One of the things that I do at a sort of a simple level is something I call the basic sales equation. So I say, how many customers have we got? What's our conversion rate? What's our average order? And what's our gross margin? And that tells us what our gross profit is. And then, of course, I do have stuff after gross profit, as we already walked through, but this quickly tells me what's going on. So as an example, if we had 100,000 visitors to our website and we converted at 2%, that means we've got 2,000 orders times $100 average order, so we got $200,000 in sales. If we've got a gross margin of 50%, that means we've got $100,000 in gross profits. And so then I start saying, all right, well, if that's what I know, then what's happening in each of these segments, and what can I do to sort of make all of these numbers better, right? And where can I get more customers, a better conversion rate, a better average order, and better gross margins? So in the case of customers, maybe you've got your own website and you've got Amazon. Well, what's the traffic to each of those, and what could you do to get more traffic there? What are you doing on paid search versus organic search, right? Free customers are better. But there's so many places now where if you want to get in front of a customer, you got to pay to be there. That's just a regular cost of e-commerce these days. Email's changing all the time. So how's your email program working compared to last month and last year? Social, of course, is huge. What's happening there? And even by channel. It's no good if you were the king of the hill, 6 years ago on MySpace. Now you need to be winning on Snapchat and Instagram and Facebook. So, how are you doing? What are your numbers in there? And then direct another. Then you get to your conversion rate. Well, some of this is online, and I've been in a bunch of businesses where there was a lot of sales happened on the phone. And some of those did not get captured really well in the accounting system that we were using. So you need to know what's the split of your business. Same thing, how do your customers look? Have you got consumers and B2B? What's your mix in that area? How about new and existing customers, right? If you're having to go after new customers all the time, it's going to be expensive because you're going to be paying to get to them, right? If you can go back to existing customers and get some repeat orders, that's a lot better. A lot of companies overlook international as a possibility, and so maybe you've got opportunities there. And then a lot of companies use some sort of a sample program to kind of help conversion rates, but you need to understand what's happening with samples and how are those programs working. Average order. What's going on with the products that you're selling? And an order is a function of what product at what price and how many did they buy, right? So what are your mix on product? What's your are you getting your regular price for it, or are you having to discount? Are they buying one, or are they buying 10? What could you do to get them to buy some more? And then sometimes there's a seasonality to these things, and some things are perishable. I was thinking about Christmas lights earlier today. So, you could be doing great, but all of a sudden on, December 24th, you're not going to be able to get your price on Christmas lights. You're going to have to mark them down and get rid of them and then just kind of sit and wait in the weeds until October or so, and you can start, really selling them again. So if you've got a product whose price is really good at some times and very inelastic or very elastic at other times, you need to kind of take that into account. What's driving your gross margins? Do you do drop ship products where you've got somebody else's brand, or have you got private label where it's your own brand? Have you got different categories? Maybe there's a time of year when certain product categories are huge and others are not, and maybe some categories are really competitive and others are not. Tracking what's happening there is really important. Can you sell some accessories, right? Do you want fries with that? You're buying this. Most people would like to have one of these with it. Can you do some of that? And then can you add an install or a service to it? I was thinking earlier today that if I was back in the flooring business, people were always worried about getting their flooring on time, and I was thinking about selling them a package for $75. You can track your order. And I would put a mobile GPS unit with a battery into an envelope and wrap it onto the top of the pallet. And then when it got to them, they could track it by GPS the whole way. When it got to them, they could send it back to me, and I'd give them $25, which would probably be my cost of the unit. Well, I just made $50 an order by giving them information to make themselves feel better and to not call me on my customer service line. So think about where can you add some sort of a service to kind of make your product better for the customer, particularly if there's not a real cost to you in doing so. Then, and I've got this under gross profits, but you need to have a strategy about taking the money that you've got and reinvesting it in the business, or giving it to some of your stakeholders. And maybe that's paying it back out to yourself as the founder. Maybe it's paying it to investors that helped you get going. Maybe it's a kind of a bonus program for some of the people that started with you when you had nothing, and they took a below market salary to join you, and maybe it's time to kind of reward them so they stay around. And then, and I can't say enough about this, you need to know what your number is for your rainy day fund, and you need to be funding it. So if you know that you want to have 2 or 3 months payroll in the bank at all times, and you want to have money to expedite a shipment of inventory, maybe you need to have 50 or 100 grand or more set aside, and you should be planning on plowing some money into that. And that number grows, of course, as the business grows. And so you should be thinking about where do you want to put your profits and getting ready for the rainy day. All right, so the financials are standardized and formatted, but there's whole other parts of your business, like customer counts and things like that need to be tracked and recorded every bit as carefully as your financial data, and you need to be digging into it. And then when you see something, just like I said with those ratios before, a deeper dive will give you a better understanding of what your business is. Charts. I love them. And I know that there are others that don't. They can just look at a row of numbers and it makes sense to them. But so if you're one of those people, remember the people like me that really benefit from seeing a chart, okay? And lots of times it'll tell you a good picture about what's going on with your business, because just visually for a lot of people that's how they learn, that's what they see. So I'd encourage you to come up with a standardized set of charts. All right, now let's make a plan. So this is really a budget. And budget's a bad word. I like plan better. But you need to come up with a way of setting goals for your business.
Well, let me just ask folks, Michael, for anybody who's got a budget, who's already has a budget in place, not that you're working on one, not that you know how to spell the word, not that you heard about it, but that you have one and you have a comparison in your financial statements to your budget, go ahead and leave a comment. I just can't wait to see the answer to this. I agree with you. Budget's another one of those sensitive words where everybody's kind of like squinches up. Now we're getting to a little bit more loose answers. Yeah, no and and budget. What's budget? All right, so plan, budget, whatever you want to call it. Carry on, Michael. Sorry.
All right, no problem. Glad to have the chance to grab a sip of water. All right, so really it's like saying, hey, we're doing good or we're doing bad, but compared to what? Right? That's the real question. And if you don't have a plan, you don't have anything to compare to outside of your history. But for a lot of you guys, you have such fast-growing companies that it's not helpful to compare to last year because you were so small or maybe not even in business then. So make a plan, and then is that plan working? You can go back to previous periods, and it will reveal seasonality and cyclicality. For instance, some of you are going to be you've got Amazon Prime Day coming up. What did it do last year? What happened in the week after Amazon Prime Day, right? Did the bottom fall out, or did you keep selling? It helps you to understand what your cash needs are going to be. It's good to look back. And then the other thing is, it's really good to take your actuals and push them through to predict your year-end results, right? So if you've got a budget laid out by month of what you think your sales are going to be, these are all estimates, but you say, well, we think we're going to be, like I said, 50% gross margins. Well, then you have a sense of what your cost of goods are going to be. And so if you start saying, hey, we're really not hitting that goal, or we're beating that goal, then you can start to change your numbers, and it'll give you a picture at the end of the year of where you're going to be. And if you're beating budget, all of a sudden when somebody comes to you and says, hey, I want to take on this new thing, we want to buy a new piece of equipment, or we want to introduce a new product, or we want to try this new marketing channel, but it's risky, all of a sudden you're going to say, yeah, we could throw some dough at that, and if it works, that's great. If it doesn't, we didn't eat into our savings to do it. We've got money, we're ahead of budget, we're okay to do that.
Michael, let me just hypothecate the average budget process right now. Is that a word, hypothecate? I'm making it one. Anyway, it's a word, so write it down. So I think that the average person in the e-commerce space, especially as we're fresh startups, 2-3 years maybe, guys go, hey, this year I want to do $10 million. And they get going, or 2 million. It doesn't matter what the number is. They put a big number out there, but they don't put the next number out there, which is at least probably gross margin, and beyond that, it's probably net profit. And I encourage each and every one of you not only to include those three numbers, but to do it by month. So, what I have found is that guys will throw out the big number, go, hey, it's 2 million I'm doing this year, 10 million or 20 million, it doesn't matter what the number is. And then in June you ask them, hey, how you doing? And they're like, well, we're at if they said 2, we're at $500,000 or $600,000. They're way off their number, and they don't really realize it because they're not doing those regular check-ins. And so this is why you can't just say this year I want to do X. You got to include those three, at least those three things. You should do more, to be very honest. And then you got to do it monthly as well, because you're going to do kind of a sense of, does this really, a gut check, a smell test. Now, we all know that in December we're going to have nice month if you're in the consumer business on Amazon or retail at large. So it's okay to kind of bounce those numbers up. But if you want to do 10 million and you've only done 2 up through November, you got to do 8 in December to make that thing come true, right? And it's always kind of like the unwelcome surprise in the third or fourth quarter where you're like, we're not going to make it, and we don't know why, and if we would have done things earlier or better, or maybe that idea to begin with was tough because we didn't have enough capital to put in the product. And fundamentally, this is the point, is when you make a plan, it allows you to set those big numbers, whatever they happen to be, and then line up capital and timing it based on, I need to make my purchase for Prime Day here. I need to make my purchases for Christmas here. All of those things have to make sense. And it is kind of a pain. Most of us like to do marketing more than we like to do this kind of stuff. So, this is still an important process. So back to you, Michael.
Yeah, it's a pain, but it's sure better than the pain of getting surprised in a bad way by being short on cash or something like that. So it's always good work to do. All right, so let's go back to our marketing example that we had. And I'm just going to fill in the numbers here, but we're going to only focus on the selling and marketing. And you'll remember that we spent $60,000 on marketing. We thought we were going to spend $55,000. So we were $5,000 over. And so this is a hypothetical story, right? None of these numbers are real. But let's say that somebody comes in and says, hey, let's use Viral Launch to kick off our new product. It's only $300. I went to their website and they got a plan for $300. Let's do it. And of course, the answer is, hey, $300. Yeah, let's do it. So as we look at we talked about our chart of accounts. So there's marketing, and then there would be some advertising that we would have budgeted, and then maybe we had something for promotion. But now we got to realize that once we said yes to that, we were starting to add a line in here that said the program is free samples to get a better BSR rating on Amazon, and that we were going to use Viral Launch to do it. And we had nothing budgeted. And now, just on a whim, an ad hoc basis, we're going to spend $300. Okay? So let's do it. Well, we're going to take that same thing now and just expand it out just a little bit. And so there's the $300 that we said we would spend, and when it turns out we gave them our credit card and they only charged us $300, we did it on February 1st. Hey, it's only $300. Well, then we found out that for the $300 you can do one product and you can do it for 15 days. And while we saw a little bit of traction, we didn't see enough, but we still liked the idea. It seemed to have promise. Excuse me. So we decided to sign up for the viral subscriber program that they've got, which is the next upgrade to the Uber Launch program. And now we're paying $350 a month because we had more than one product and we wanted to do it for more than 15 days. So now we're into this thing for $700, for $350 for February and $350 for March. So we're in for $700 there. And what do you know? It worked. We sent out 250 products, but we had a cost of goods sold of $8 a piece on those free products that we sold, that we shipped out. So now we're out $2,000 in product that went out there. And Amazon said, hey, we saw you ship 250 orders, and we're going to charge you $2 an order, so you owe us $500. And then USPS said, hey, good job on your $250 orders, 250 orders, but we charge $3 to ship them, so now we're out $750. And then maybe we've got a bookkeeping program where they say, hey, it comes out to basically to record all these transactions and all. Basically, it's about $1 a transaction. I'm making up all these numbers. And then maybe we forgot to include installation, or there was something and people started calling us and we got a bunch of phone calls and basically it cost us $5 a call. So we're out $500 there. Well, now the whole thing, and it might have been awesome, but it wasn't just $300. It was $5,000. So by taking a little deeper dive and thinking about all of the things that could be happening here and totaling it out, we've got a better picture of what really happened.
So, Michael, let me just pause you there. So everybody who is already kind of saying, yeah, I got my financials, I get them on a timely basis, if you don't have in your income statement things like these codes for doing a product launch, and that you're breaking out the free stuff you give away, you're breaking out the free FBA, the free inbound shipping, the free receiving, the free whatever, and really have a product launch breakdown in your P&L, you're probably missing the true cost of what's actually happening. Because even though in our instinct we're like, all right, well, we know it's more than $300 because we got to do product, and Amazon is going to get their cut of the action, but people don't really fully track and realize this. And I'll tell you, in many cases, all around the world in the business I've been involved in, when we start breaking things down, we really start to see things like, whoa, we did not expect to see that. And it can be extraordinarily revealing. And in one case, a buddy of mine, we were working on his business. I was the chairman of his company, and we found $50,000 a month, or actually 50,000 pounds a month, excuse me. And by the way, the pound back then was worth almost twice a dollar. And that was per month that we found in costs that were not expected to be there. And once we started tracking it and measuring it, then we started, as Michael would say, managing it, right? What gets measured gets managed. I hope I'm not blowing up one of your slides later. But
No.
The point is, these are real important things. They're critical. And if you guys don't have your P&L to this basis where you're managing advertising and marketing and promotions and these things in a different way, or in a very explicit and specific way, you're missing out. If you just put everything in marketing and advertising as one lump sum, that's not managing your numbers. That's really not enough. And so back to you, Michael.
All right. So let's just push it out one more time. I'm going to go back to what we had. And remember we were feeling bad about this 55 to 60. That was what really kind of messed us up. If we had just done the homework, right, we would have known that it was going to cost $5,000 for that sampling program, and we would actually be feeling great about the exact same numbers, right? We'd actually be $1,000 better on operating income than we were. And it takes away that bad surprise. I'm not changing actuals when I do this, right? What I want you to understand is by doing the extra homework, you end up setting proper expectations for yourself and for others, and it shows that you've got a command of your business.
Yeah, and Michael, let me just pop in here. So as long as you have this screen up, so the point isn't that you should or shouldn't do various marketing activities. Quite the contrary. The point is you should keep score and see how well they do and compare them to one another and so on and so forth. Now, again, at the risk of blowing up one of Michael's future slides here, the fact is the revenue from January was $90,000. In March, it was $100,000. You can see those two columns very clearly. The marketing in January was $15,000. The marketing in March was $25,000. That same 10 is basically you sold a dollar for a dollar, right? Now, that in some ways I'd like to hunt down that marketing guy or the CEO and go, hey, dummy, let's just stay at the 90,000 and call it a day. We made a lot more money, right? The operating income 11%. But if a marketing or the CEO or whoever says, hey, we launched these 3 products, we knew it would be an investment, we forgot to put it in the budget, we'll remember next time, but this is why we did it, here's the BSR, here's why it all makes sense. That's all okay and perfectly plausible. This is not about getting the numbers to be perfect or having profit or not having profit. This is just about saying know the inputs and the outputs. Know what's happening in your business. Because I got no problem with investing in your business, but I got a big problem with kind of just wandering around, walking into walls, and being surprised when something really good happens and not knowing the reason, because that's just as bad as something bad happening and not knowing the reason. Because you can't replicate it and you can't avoid it on either case. So, Michael?
Yeah, it could be that April's numbers have sales of 125, right? And then we'd say, man, that investment that we made in February and March was awesome. Look what it did for us, and we're on a whole new trajectory. So, but it is about tracking it and understanding what's going on. All right, so budgets can flex, but you should do so intentionally. It's not bad that we spent the first 300 on the viral launch, but we should do it with intention and our eyes open. If you're going to go off budget, do the homework. You will miss some things. Don't worry about that. The exercise is worth it, and you'll get smarter the next time. And then nobody does a one-year budget and sticks to it for the whole year. So plan on at least one mid-year update to the process. All right, home stretch. And I'm going to go through this a little bit quickly because we're going to be a little close on time. But so this is kind of how do you put some of the structure around this. One, if you're not using QuickBooks or Xero or something like that, you got to do it. You got to do it. It's some work, but it's not expensive. I mean, the software is not expensive. It's the time and the expertise that get expensive. But it's going to be worth it in the long run. Load your history. Take the time to figure out what you've been doing, because it'll really be helpful to you as you go to build a budget going forward if you have a longer view than if you just start saying, well, I'm going to open up QuickBooks and I'm going to put May's numbers in it. It'll really help you if you put in whatever you've got going backwards. Set dates for closing stuff. Make sure that you've got some cadence or rhythm to this process. Get all of your stuff in by the 10th of the month. Otherwise, the financials start to get stale. You're driving in the rearview mirror, and you're just frustrated. So set some dates. We need this stuff in by now, this stuff a couple of days later, and everything. Then we're going to have a meeting a few days after that, and there should be a regular cadence to it. So on a monthly basis then, build a monitoring system. Put in some charts. Have some meetings. If you've got a team of people, give, where you can, assign accountability with responsibility to the people for those numbers. So if you've got a marketing dude, tell him, you've got a budget, I'm expecting great things. But let them have at it. Compare your numbers to your budget, to the last period, and to the year ago period. It'll give you a better picture of what's going on. It's too easy to have a panic in February and then realize that February is 3 days shorter than January, and it's expected to be 10% down in some businesses. And then set aside time, especially if you've got partners in the business, other managers, to do some deep dives on these variances, the good ones and the bad ones. Why are sales up, right? Let's do a deep dive and understand it so that we can replicate it. On a quarterly level, then, that was monthly, let's do it quarterly, then adjust your budgets to reflect reality, because and particularly when you're new at it, you're going to make bad guesses, and you should make corrections so that you've got a better picture. You're getting better and better and better at refining your forecasting. Push the budgets through to year-end numbers so that you know where you're going to end up at the end of the year. Are you going to have the cash that you want to pay out a year-end bonus or not? Are you going to be able to get through January, which lots of times can be a really quiet month? You need to know that you're going to have the cash to get through some of that. And then review your decisions every quarter or every half year about what gets put back into the business, what gets returned to stakeholders, and what gets set aside for savings. So run a budget process every year. I've been in businesses where we actually started it back in August, just because it's a long thing. And in smaller businesses, you don't need to do that. But I would get it all wrapped up before you got super busy in December. So I spend October, November doing these frequently. Establish some baselines, yours, the industry, the economy. Again, what's the macro picture of what's going on? Ask all around your team, your friends, your board of directors, everybody, what are some new products, what are some projects that we should be working on? And then go through the exercise of kind of costing them out. What do you think it's gonna cost in terms of time and money? What do you think you're gonna get for it? How confident are you in that number? Is there a risk to it or whatever? And then are there other sort of intangible benefits that are going to come to it? Maybe you end up with a better workplace that people want to come to, and it helps your retention. There could be other things. But get those projects all ranked up, and then the best candidates get moved forward after you really scrub them and you get estimates on cost and timing. And then, as Steve pointed out a little bit ago, you drop these into certain months, right? So that you know when they're going to hit, because you're not going to do everything in January. All right, last slide, second to last slide. This week, if I was to see all of you try to make the most of this, open up last month's report, get the last financials that you've got, and get into it. See what you see there. Develop some ratios for some of the key parts of your business. Maybe you've got a bunch of inventory and you don't really know what your inventory turns are. Well, if inventory, that's where a lot of your cash is going, you really need to know what's going on with your inventory. So develop some ratios, build some charts around some of that kind of stuff. Then, in the coming weeks, fold in some of the other stuff that's not there. Again, some of the stuff that you've got in Google Analytics or some of your Amazon data or other things. Start tracking and build a history of some of those other numbers. Schedule a meeting with your team and talk about the financials. And maybe it's just you and a partner, but make a meeting and sit down and say, we're going to talk about the financials. And then do a deeper dive on at least one key number. Try to really understand it and break it down and maybe start to track it at a more segmented level. And then in the next 90 days or so, draft a target set of numbers as budgets or goals, right? By now you've looked at the financials for a month or two, and you can start to say, all right, we know what our gross margins are, so here's what we think it's going to be going forward. Or we know what our marketing spend is, so here's what we think it's going to be going forward. Make a rule to not approve any project that doesn't have a written rationale with its ROI. And that doesn't have to be a super in-depth thing, but it should be somebody that's said, I've thought through as many of the costs as I can, and this is what I think it's going to get us, and this is why we should do it. Then you've got something to say yes to. It's too easy for somebody standing by the water cooler to say something. You like them, you want to be a good guy, you say yes to it, but you aren't really tracking it. So get it in writing, then you can come back to it and review it. And then, again, develop a strategy for managing these profits as you get successful. How much gets plowed back in the business? How much do you return to stakeholders? And how much do you save for the future? All right, that's all of our steps. Commit yourself to the process. Start with the basics of the 3 primary financial statements. look at the bigger picture. There's a system to these things. It's kind of a machine, and you. I'll remind you, you are an entrepreneur. You've done stuff way harder than this. This is just another system. You can get it, and when you get it right, it'll be right for years. It's a great investment of your time and energy. And then when you get to an exit, everything's going to be set for you, and you're going to look like you've got total command of your business. That's all I got.
Okay, great. Nice job, Michael. For those, I'm not going to turn on my video because it seemed like I got a bandwidth issue over here. But can you hear me okay, Michael?
Yeah, we got you.
Okay. All right. So anybody who's got a question, go ahead and type it in now, and we'll try to address questions. I know we're past 6 o'clock Pacific time, and wherever you are, it's past what 1 hour time slot would be. But if you have questions, go ahead and ask them, and I'll add just a couple of comments in. So the first thing is, I hate doing financials. I hate the concept of debits and credits. The whole idea is extraordinarily annoying. And by the way, it gets 10 times worse when you start talking about GAAP accounting standards. Don't get me started, okay? Some of that nonsense is the most ridiculous things on the planet. And by the way, all the tax people and accountants, they love that attitude, by the way. So, but for you CEOs or you chairman or however you think of yourself as running your own company, owning your own enterprise, think about the value of your time. I would, I've been doing this a little longer, but I would always recommend that you get somebody to do your bookkeeping for you and make sure that you understand and set good expectations between each other in terms of closing your books. You should have a set date to close your books, for example, and the reports that are required by a certain date. And this is appointed ahead of time instead of panicking and yelling at each other later when expectations have been missed or not communicated. I also would get help with the budgeting process if I were you, and that's what I would do because I don't want to do the whole process myself. All of these things are good because you can learn while you get expertise. And to be honest with you, our time in our best strength, whether it's marketing or raising capital or going into China and negotiating with vendors, whatever our strength happens to be, we're going to be much better at that than we are at stuff that we don't like. So if you love financials, fine, dig in, knock yourself out, and go nuts. But if you don't, then find experts that can help you. Michael is one of those experts. He's a very modest guy and has a lot of accomplishments, and you guys know that we don't run around selling stuff right in your face. But if you ever thought about doing a budget process, I would consider a good decision to be at least reaching out to Michael and finding out what that looks like. For those of you who don't have a bookkeeper, in a couple weeks we're probably going to do another session with a bookkeeping person to come in and kind of talk about some of the basics that maybe you have a financial statement, so you ticked off the box, but you really don't have enough information in there, like Michael alluded to earlier about the cost of marketing and so forth. And next week we're going to do a sourcing from China, kind of a little top 10 mistakes or myths or whatever. So my point is, if you get experts to help you, you're going to have a better and more profitable business. If you think you do it all yourself, you're just going to be the biggest bottleneck on the planet. And I've been that bottleneck. I'm not sure it was the biggest on the planet, but top 10. And, so I definitely would encourage anybody who's been around the block knows that having these things in order can make your business not just more profitable, not just, easier to operate, but actually something you enjoy looking at the scorecard. And you're kind of anxious, and you're like, oh, man, we close the books on the 5th. I don't get the thing till the 10th. I'm anxious. I want to see this thing. And in this day and age, you can actually look in QuickBooks and you can look in Xero or any of these online systems, and you can see the things, but they're never going to be quite accurate. They might be predictive on some level, but they'll never be 100% accurate expense-wise until you have all your bills in. So, all right, I don't see any questions popping in, but I'm not sure my bandwidth is Anton says, thank you, you're quite welcome. Thank you, you're welcome. Thank you, you're also welcome. And just repeat that for anyone else. We do thank you guys. I encourage you guys to go ahead and throw any comments in the Amazon Professional Sellers group, the little event in there. If you guys have ideas how to make it better, worse, whatever you want. I mean, we could dial it back a notch if we had to and make it a little less awesome. But the objective is that you guys take something away that maybe you wouldn't have had if you didn't take the time out of your day. We know your time is super valuable. we certainly would respect it and never try to waste it. And hopefully you guys have found this productive. So you're welcome, Michelle and Jeff as well, Brandon and everybody. Michael, any parting words?
No, I would have finished on time if I wasn't interrupted. I'll point that out.
Well, we've got our committee looking into that problem, and in case anybody was wondering, the landscapers just arrived, of course, and they started running really noisy equipment right outside my office. So I've been off camera and off mic, so I could have interrupted 10 times more.
No, I enjoyed putting this together. Steve, we share this goal of trying to make entrepreneurs successful, and I hope that this helps some folks. I've been there. It's a long learning curve, and if I can share some of my stuff with them, I'd be happy to do so.
Love it. Thank you guys again. Great job, Michael. We'll talk again soon. And for those, again, please go to the Professional Sellers Group. Leave any tips, hints, feedback that you have so we can learn, get better and smarter. We're just like you guys. We want to be better, smarter, faster. It's hard to be better looking, but, I'm open. I'll give it a go. All right. Thank you, everybody. We'll see you guys later. Thank you, guys. And you guys all be safe out there and happy selling. See you later.
Bye-bye.
Bye-bye.